All right. Good morning and welcome back to good evening, sorry, and warm welcome to all of you for another session of life analysis. This is your host Harsh on behalf of GTCFX. A warm welcome to all of those who are joining us live from YouTube as well. I think Mr. Mansoor has joined us. Welcome, Mr. Mansoor, on YouTube and on Zoom. We now have with us Brother Matthew and Brother Alexander for the first time, I believe. So, welcome to the family, bro. and you need to have just one registrations, and you are in for all the sessions. Let's get started off. We believe more would be joining as time passes. Let's get started with the risk disclaimer. And yes, I do remember it's for the first time I've seen you here. So once again, thank you for taking the time out, and hope you have a good one. and Brother Matthew, I hope you got or you were able to go through the recorded video for risk management and time frame. If you do have any problems or queries still in that, kindly write an email. I will solve them there. All right. Now we've been joined by Mr. Rohit. Thank you very much, Rohit Bhai. Let's get started off with this disclaimer. I do have a sore throat today. Kindly excuse for for that. Very good evening. Very good evening, Rohit bhai. I hope everything is well. Okay, no problems at all, Matthew. I think I sent you the direct YouTube link. You should be able to go through. I was actually waiting for you in this session as well, but it answers all your queries there, along with the number of lots that you should be taking and what criteria we should be looking for. Okay, so over the counter margin derivative contracts, including contracts for difference, the CFDs, known as the contracts for difference, and spot foreign exchange are complex instruments. They come with a high risk of losing money rapidly due to leverage. You should consider whether you understand how these products work and whether you can afford to take that high risk of losing money. Independent professional advice is highly recommended before any kind of investing, specifically trading. This session serves an educational purpose and will not include any financial recommendation or advice. Thank you. Let's get started on the charts, please. Please do confirm if you are able to see the charts now. And I also believe we have been joined by Mohammed Bhai. Thank you very much, Mohammed sir, for joining in. We are just starting, and the first one is flashing up on your screens. The counts are already being prepared, which on the technical report that I discussed over the last few sessions. Nothing much changes, but price action is now hovering very close to potential minute wave 4 termination, as described on the chart here. There you are. These are the wave counts of proposed one larger degree count with the minute wave 1 and 2, and one of the classic examples of what is an extension? Generally, wave 3 is found to be extended, and this is a classic example. You've got minute wave 1, 2, and then actually you've got sub-minute wave 1 and 2 and 3 and 4 and 5, which comprises of minute wave 3 and then minute wave 4. Recent peak is we've adjusted the count here, minute wave 5 comprising minute wave 3 up there. So what we are seeing right now is uh, it's either an expanded flat, a portion of an expanded flat, or a complex correction, wave 4 itself. Now, as we go by the price action right now, we are trading around the 1355 mark. It is, and this is the Fibonacci ratio, the 38.2% of wave 3. All right, that's the ideal Fibonacci correlation for wave 4 to terminate. It's coming around 250 mark. That's the 23%. It can go to 32% as well. So it is 1.1050 and 1.2050. That's the range, which is ideally, now this is the range which is ideal for long positions. We've been, I think, uh, there are some connection drop I saw, and connection being dropped. I think, let's see, let's wait for a few minutes. So 1050 and 1050 and 1250 is the ideal range for going longs. But tell you what, since it could be a very shallow wave for corrective decline as well, so it could actually bottom round I mean before that 1250 mark as well, or just around the 1250 mark and turn around higher again. All right, so let's have a look at the potential targets, entry, and risk. The connections are being dropped. It is seen here. If you do have, if you are facing problems, please do let me know. If the connections are dropping without your, yeah, I could see Muhammad Bhai coming in and out, going in and out frequently. Let me know if I can help, brothers. Thank you. Okay, that's a hypothetical extended extension for the fifth wave minute degree. I'm expecting price action to drop at least around 1250, or maybe it can rally from here itself. But tell you what, if we go by the five wave decline that we are expecting, then there is a wave four consolidation going on right now around here. It's maybe wave one and two and three and A, B, C, D, E. This is a that's a clear triangle, and I would not be surprised if we see a one more leg lower, dropping towards 1255, and then beginning to turn higher again. Okay, this looks more highly probable. It's actually 3, 3, and 5 actually. So it's A, B, and C wave going on. Within the C wave, maybe one last leg is left. So we'll be watching closely the 1250 mark. I mean, if that corrective wave ABC is being identified correctly, and remember we had a triangle consolidation earlier, and then the thrust wave. That completes five waves, and then three down, three up, internally, one, two, 3, triangle 4 and 5. So maybe one more leg lower left. That's the trade setup. So let me write down here if it helps actually, because I've been getting a couple of emails. If I can write it down. So here is the potential entry, exit, and the stop loss. The first trade for the day coming up on your screens now. Potential buy is around 1.1050. We should be doing a range here. Ideally, you can pick it up at 1.1250. And the stop loss, I'm recommending 1.05. That would be too far away. So let's put it around 1.07 right now. Technically, it needs to go around 1.05. The risk reward ratio would not match. So I'm changing the stop loss to below that particular support, 1.0750. And the potential targets are now pointing towards 1.17 and 1.2. All right. So that we move the targets here up to 1.2, then the risk reward ratio actually serves a purpose, right? More than 1 is to 1.1 is to 2. That looks like a good risk reward ratio. So that's those are the first trades for the session, please. Euro USD looking to buy around 1.1250. Potential stop 1.0750. That's about 500 points. And it's about 900 points of reward if you carry through 1.2. All right. Okay. We've been now joined by Mr. Ishwar. Okay, Shuklaji has also joined. Thank you, both of you. And that is a perfect time because I was just starting to analyze gold. Hello, Ishwarji. I hope all is well with you, and we're just about to begin gold now. Dollar index, I'll follow up through just after gold. Okay, gold chart is after dropping through 3250, which was expected, but yes, Bitcoin is already lined up, sir. So we will go through Bitcoin as well. No worries about it. So this is the 4 hour chart for gold, and let me first explain or discuss the wave counts and probabilities, and then we'll get into the trade setups. Okay, now this is the perfect view. If you look at the minor degree counts, it is 3, 4, and 5, which which would complete the rally for gold, which started all the way from 1600 levels or 1800 levels precisely in October 2022. Now, probable count has actually changed, and the reason being, uh, after terminating wave 4 around 2500, we've had minute 1, minute 2, minute 3, minute 4, and minute 5 is an extended wave as well. Normally, it doesn't happen two extended waves, but in the metals, especially gold, fifth waves can really go and extend themselves. So we have kept that in mind and readjusted the wave counts to the preferred one, where the minute 1, 2, 3 are complete. That's exactly the 1.618 Fibonacci extensions of wave 1. Actually, if you want to have a look, you can see that 1.618 extension. That's a bang on target minute wave 3. And also, if we go a step further, we have minute wave 4 complete just around the 38.2% as well. So that's a very quick wave structure which is unfolding in the metal. And also, if we go by the alternation, wave 2 and 4 are again alternating. Wave 2 was an expanded flat, wave 4 is a sharp decline towards 38.2%. So if we subdivide the recent wave counts, it is quite possible that another rally might be resuming. We are not, I mean, no one can be 100% sure, but it is quite possible that the structure we are seeing here, it looks confusing, of course, to many traders right now, but this structure might be unfolding as the beginning of the fifth wave of minute degree. Now, if what we are discussing is correct, then this could be wave 1 right there, and a lower degree wave 2. And if it is correct, prices would ideally stay above 3260 and move forward. So if you're wanting to trade, those who are wanting to trade towards the larger degree trend higher, and the risk reward ratio is reasonable enough right now, you can you can actually plan. I'm not writing it down here because there are a couple of scenarios coming in. You can actually plan long trades right now with a very strict stop loss of 3250. I repeat, sir, potential longs can be initiated right now with a strict stop loss around 3250. All right. And if that works out to be correct, then okay, of course, we need to see a price confirmation about that 3371 mark, but we are almost 80 to 85 points away. We cannot wait until that price. So ideally, this could be a lower degree wave 2. And if it is lower degree wave 2, then we should be sharp rally. We should be witnessing a sharp rally as wave 3, 4, and 5. Possibly, it could go and test 365070 range. Okay, so this is the high, one of the high probable trade setups. For the above count to hold true, the price action must stay strictly above 3250. I repeat, sir, strictly above 3260. Sorry. So I'm proposing, if you're buying, then your stop loss should go strictly around 3260 or 50, just of 10 points below that low. All right, the risk reward ratio is good enough right now. That is towards the trend. Okay, what is the opposite side now? Because we need to always look into the risk side as well. If a major top is in place at 3500, that is, if it is not an extension, if wave 3 terminated there, wave 4 and wave 5 here, then a top is in place. If a top is in place, gold would continue declining, and the first step of reversal or the first sign of reversal would be uh, 3168. Okay, 3168. So a drop below 3160 would confirm that 3500 is a major top and bears are completely in control. Because ideally, if it is wave 4, it would not drop until 3168. All right, only in case of uh, only in case of wave 4, prices should stay above 3168. But if it drops lower, then it's a different thing altogether. All right, so two levels to watch, please. 3150 is immediate stop loss or risk, and below that 3168. 3168 goes means we are not buying anymore. We will be possibly selling on rallies. All right, so three scenarios in gold discussed. Scenario number one, long towards the larger degree trend with a strict stop loss of 3250 and potential target around 3650. If prices drop below 3250, we are out of the trade. Also, if it confirms a break below 3168, no more buying recommendation, please. Then we will focus on selling on rallies. All right. That's the scenario for gold. And now we can look out for WTI crude and Bitcoin. Lined up. Shuklaji is there, I suppose. First, the short term view, sir. Uh, Shuklaji, yesterday I think we discussed about this particular scenario. I mean, A, B, C could be in the making. So, point number one, the larger degree trend has turned up, but there is there is a wave one which looks like a leading diagonal complete at 6450, and now wave two is going on, which could unfold or drop all the way towards 5987. So this is a very good opportunity where bulls would be back or supposedly wanting to be back in control again. So the next potential trade setup for crude oil, look out for 60 and possibly even 58. So 58 and 60. 58, 59.60 then let's keep it round figures. 59.60 would be the next entry levels to go on the long side. Stop loss is going to be around the 54 or just below 55.30 mark, and potential targets. Now, this time, please do not get out taking profits cheaply. Earlier was a different scenario. It was the first wave, and price action was also entering the diagonal structure, the leading diagonal. So that was a different scenario where I recommended partial bookings. But now, if you are getting a chance around 60 or 59, a stop around 55, it's a major bottom in place looking at crude. Please, Shuklaji, forget about 40, 44 levels which are being discussed outside. We are in a wave 2 corrective mode which could terminate around 59.60 mark, and then prices are expected to move or rally potentially towards the 72 and 81 levels. According to the theory, even 72 you can ignore. Once the diagonal is complete, wave 4 of previous wave 4, in this case is 81, it acts as a magnet and prices draw towards it like like a magnet. I mean, okay. So it should move very fast towards 81. You can still take partial profits around 72 and when it drops again buy, but 81 is a good level, and then it can actually go towards the beginning of the triangle's diagonal structure. Sorry, beginning of the diagonal structure, which is 94 actually. So three major levels to keep in mind: 72, 81, and 94. All right, Shuklaji. And now the next chart, and then we will look into the Dow Jones for Rohit Bhai. Brother Alexander, if you have any particular chart to be analyzed, please let us know. We will do that as well. Bitcoin has it's a beautiful structure which we were expecting, and we have been waiting for this counter trend rally to materialize. I think since several trading sessions right now in the past. If you go by this leading diagonal and then wave B and then wave C, it could be possible that an ABC corrective wave is now completing. Prices have tested and retested the 61.8% mark. We remember we were time and again discussing about 94, 91, and 94. You can see that Fibonacci convergence as well. Keep in mind, brothers, there is another convergence coming in at 101, and this it is always possible for extended wave towards 101 or the 17% retracement as well. But all these potential resistances are good to go and enter on the short side. So potential shorts are actually triggered now around the 94 mark. Stop loss recommendation is 109110, and the potential targets, I think we have it lower. No, let's project it then. It is it might be too early to start believing that Bitcoin is good to go on the long side. It is actually what it has done is a classic wave pattern of five down followed by three up. That is what it has done. All right. Okay, let me do a simple extension because the Elliott extension is going out of the screen here. So the simple extension is pointing out towards 61 and possibly 53 or 55. All right, so potential shorts around 94, 95 right now. You might also want to add around 101 if it goes. Stop loss is at just above the high, that is 110, and potential targets can be devised at. Okay, we've been joined by Abrar now. Thank you, Abrar, for joining. Abrar, just hang on. I'll touch base with the euro again. We're just completing a couple of charts. The target is for Bitcoins towards 61 and 55 respectively. All right. So that is the story for Bitcoin. Yeah, Shuklaji, I think your crude oil is absolutely clear. Then let's pick up Dow Jones now. The story in Dow Jones is also unfolding as per script, but I think it's taking more time, and that is absolutely allowed. Now, as per the script, we are either in wave three extension mode, or we are wanting to, or Dow Jones is completing or wanting to complete minute degree impulse wave. Let me bring up the daily chart. Point number one we should note is Major top is in place at around 45,100 mark. All right. And you can see one, two, if it is wave three, four, there would be one more sharp decline towards 35 to complete the first impulse at a minute degree, and then we'll see a corrective wave. Okay. And an alternate count is we've got minute one, minute two, minute three is not complete. It is one of minute three. So minute three is going to go down here. It is just one of three, and two of three is working around. So that two of three, if it is, then it would go up to, it is quite possible to reach up to 41,800 and 43,000 as well. So Rohit bhai, you can keep watching on those levels, uh, but it's a clear sell on a rally chart. I mean, it's three up, three down. Ideally, it should go one, two, three, four, and five, somewhere close to 40, 40, 41,800, maybe 42,000. So between 41 and 43, that could be wave two of three in the making if the third wave is extending. And then what we are going to see is a fierce drop extending all the way towards 29,000. In fact, if I move on the daily chart, we are actually going towards October 2022 low, which is around the 28,000 mark. Not the, yes, it is the October 2022 low. I remember because we were playing this around, and and we could not realize a turn. That was wave four actually. We were potentially taking it as an impulse drop complete and prepared to sell on a rally and got trapped. But that's an old story now. What it has done is now wave one, two, three, four, and five complete after the October 22 bottom. And ideally, if you go by the wave principle and the theory, prices would ideally converge to wave four of one lesser degree. That should be the first stop. All right. So ideally, we are moving towards 28,000 levels going forward. It's a classic case of sell-on rallies with a major top in place around 45,000 mark. All right. So that's the story for Dow Jones. Let me review Euro USD because Abrar is trading usually the euros. Abrar, here's the potential trade setup for euro. We are 100 points difference away right now. We are 100 points away from potential buy zone. So if you want to split your trades, you can between now and 1250 if you want to split your trades. But the risk is instead of 1.05, we have moved to 1.0750. You can keep it even tighter if you want around 1.08, but 1.07 would be ideal right now. So you can split your trades between now and potentially around 1.1250. Keep your stop loss there. And the next target is at least 1.17, possibly 1.1. Oh, next is 1.2 up there. All right. So entry, stop, and exit. Okay. So these are the entry, stop, and exit for euro. And I think by that, we are mostly concluding today's session. We have discussed gold. And okay, there is one more since we have time and there are no other instruments that I've got as a list to analyze. We can move to gold. Sorry, I think we've got a message here. Let me see. Bitcoin was not understood well. It is a very simple case. Let me bring up again, Ishwar Bhai. We were expecting this rally when prices were trading around the 80, 83 mark, okay, which was a couple of weeks back. So let me explain the story again very quickly. It's important to understand what the structure is. The structure is five down, one, expanded flat two, extended wave three, A, B, C, D, E, triangle wave four, and then five. So it's five down, that's an impulse wave. It could be a part of an expanded flat structure as well, but we have to believe that it is a five wave down structure, which is ideally followed by a three waves up rally or a corrective wave. Now, if we go by this, it could be wave A, B, C, or wave three up, three down, and one, two, three, four, and five, or it is five. You can see the triangle wave B, and that is wave C. So it's a three wave corrective structure which we can construe right now. We were expecting prices to go towards 94, 95. We are there right now. Ideally, it is recommended to go short. Potential shorts can be initiated this price. More shorts can be potentially added towards 99,000 mark if the risk management is set. Stop loss would go at 110, and potential target is around 61 and 55. All right, I have removed the targets, but potential targets are 61 and 55. Consistent break. Okay, I will tell you what is the risk for short-term short trades. Consistent break above 100,000 mark. If prices stay consistently above 100,000 mark, then this bearish scenario is most probably going to be an invalid. But right now, it's a classic wave structure, five down followed by three up. It's a case structure of short selling. All right, and the stop loss, never forget to place your stop loss 110. Okay, I think the last one. I hope it is clear now. All right, so the last one, the dollar index chart can be still discussed. It is a treat to our eyes actually when we see this couple of charts, actually three charts, euro, dollar index, pound, which I mean I've literally I've been trading from that high 110.20 with 8 cap, and we started here from the second wave at 109.85 on 8 cap provider. We've been capturing the entire drop to wave 3. We were recommending wave 4 rally, so it is already materializing, and 99, 99.20 and 100 is a potential short entry. The stop loss can be around 105 or 104, and the red lines lower. They are targets 95 and 93. So entry 9900, stop 104, 105, precisely 105. Let's keep it one figure. And target is around 95, and 93 could be the last one. We were expecting it to bottom out around 95, but the extensions of Fibonacci extensions are pointing towards 93 as well. So we will confirm if it is going towards 93 again. But 95, yes, we can keep in mind with the first target. All right, sir. So With that note, if there are no other chart recommendations or on demand, then we would like to bring today's session to a pause. If you do have any questions, then we can discuss it right now. I think we have touched base with most instruments that we all are trading. Rohit by dollar index, Dow Jones, Abrar is a Euro USD, Shuklaji, oil, Nifty is not required. I mean, Rishi is absent today. He trades Nifty. Alexander, brother, if you do have any particular chart in your mind, let me know. We can pick that up as well. If it is not there, it is okay. Thank you again for joining, everyone. And for those who are joining or watching from YouTube live, thank you as well. Thank you, everyone. And we will now meet on Tuesday, 4 p.m. Dubai time for yet another theory session. Till that time, you can note down this address, please, Alexander. Again, since you're for the first time, others are already in touch through email or queries. If you may have, feel free to write, please, at harsh.jappi@gtcfx.com, and would be more than happy to get back to you at the earliest. Thank you, sir. Thank you, Shuklaji. So let's bring the current session to a pause, and we'll be back again on Tuesday. All right. Thank you, Brother Matthew. Thank you, Alexander. Thank you, Rohit Bhai. Thank you, Mohammed Ji. Lost his connection. Thank you, Abrar, for joining, even if it was late. Thank you, Shukla Ji, again. And let's bring the session to a pause here. We'll be back. Next session is on Tuesday, 4 p.m. Eastern. Not Eastern, but Dubai time. Sorry. All right, then. Goodbye and have a blessed weekend, everyone.